What is going on, everyone? Welcome back to another live stream. I hope the audio is all well. I've had serious, really complicated computer PC issues the past week and a half, and hopefully nothing bad happens. I've had like the blue screen of death twice in the past 2 days, even when setting up this live stream. So hopefully everything will run smoothly. Hope you guys are all having a great morning wherever you are in the world. Today's live stream is going to be, I'm going to be talking about a few things. I'm going to be talking about a trade I took yesterday on GBPCHF. Going to be going over, I actually wrote a list because there's a few things I want to get through. I want to do a funding update. So I've been getting a few questions about Traders for Traders, how most of you guys know that I've been doing the practical assessment with Traders for Traders. I had an issue with them just before on GBPCHF, so I'll run you guys through that. What else? New risk calculator. So as you guys know, I've been using Magic Keys for quite a while now. Since my computer issues, when they send it out to you, they give you like a code when they ship it to you. I don't have that code anymore, and of course my hard drive ended up frying as well. So I've had to download, get a new risk calculator for MT4. NFTs, scammers, Austin Silver and James Bruce are collaborating and doing some mentorship. So the Black Shirt Club. I don't know if you guys are aware, Austin used to do this about a year ago. So I'll talk a bit about that as well. And yeah, so I hope you guys are all doing well. How's it going, TJ? Hey, Tom, how you going? So yeah, so I guess we can jump in. So we will talk about my GBPCHF trade, but mostly I want to talk about, I will start with this. GBPCHF presented a shift candle probably about half an hour ago, and as I went to enter it, the way with Traders for Traders, how they only allow you to leverage 10 to 1, the risk, because my stop loss was so tight, even with the spread included, you simply cannot execute a full 1% position. This has kind of screwed around with my money management system and my risk management. If I took a trade like GBPCHF, for example, it never got executed. It would have got tagged me out. So I guess a bit of luck on my side there. But if I was to take the trade, it wouldn't let me put a whole 1% on it. Let's say I had to reduce my risk on that trade based on my risk management and how I take profits and everything. I would have to reduce my risk to 0.5%. If that trade was a winner and I take full position off at 2R, let's say I take the next trade that presents, whether it's this, the next day or the next week. If I took that trade and I was allowed to use a full 1% risk because it was a bigger stop loss, I literally, and I got, let's say it was a losing trade, I would have lost that other trade plus more. And that has kind of really kind of messed with the overall profitability of Traders for Traders. So the 1 to 10 leverage is kind of a real, there is ways to work around it, but you just got to remember it's going to take you longer to pass the challenge. So the main thing you can do is just use a set risk of 0.5%. On most of the trades. It is a good thing that they don't have a time limit. So I actually joined Traders for Traders last October, and I'm still going with them. Haven't blown the account, just kind of bouncing. And I had probably about a 6 or 7 month break where I was just trading my personal capital. But yeah, so let's jump into the charts, and I'll go over my GBPCHF trade that I took yesterday. This will also kind of play into the some trade ideas that presented as well yesterday, and also some that presented today. So as you guys know, I don't trade shift candles in the Asia range. Looking at GBPCHF today, being binary, it is kind of broken. So if I just blow this up over here, you can see that's the Asia range just there. A candle breaks above it and then kind of comes back in. So the shift candle that did present, which was this one, it doesn't look like a shift candle at all because there was heaps of volatility on the London Open. You probably can't see that because, sorry. So this shift candle here, right? there was indeed a shift candle when it closed, but volatility kicked in due to London Open and it kind of just pushed it back down. Right here is where the Asia range was broken based on the Asia range indicator. So that was a valid entry. But like I was saying before, traders for traders, the platform did not let me execute because I was trying to push 1% risk. I'm trying to get my head around the new risk calculator. So the whole thing just kind of went wrong there, but lucky it did. So going on with, how's it going, Austin? Hey, Ryan, how you going? Yeah, so my trade yesterday, it was quite interesting to see how this played out since I have done a lot of testing and the average risk to reward you get out of these trades are about 2R. You can get runners, but it's just interesting to see it pin my 2R take profit and then kind of come straight back to my entry. So if I just go on the replay tool here and I'll kind of take you through. So with my trading, like I was saying in my live stream earlier, and some of the AceFX members know, my trading has like zero subjectivity in it now. My analysis is very straightforward. I am not doing anything crazy. I'm not looking at high time zones. Yes, I do extra analysis to kind of just build confluence, but if my entry signal presents based on my testing, I'm going to execute it even if the analysis is telling me not to, because I'm going based on probabilities, and probabilities is basically all we have in trading. If I execute exactly how I back tested and based on my back testing results, which I'm going to show you some really interesting filters that I've done through with the back testing as well, you'll end up coming out profitable. It's just literally a game of probabilities. So I was able to take this shift candle that presented pretty much, I think it was 15 minutes into or half an hour into my trading session, and price broke out of the Asia range, come back in, got that shift, and then we got that massive movement straight down, hitting my 1.5 partial take profit, and then coming down and hitting my 2R take profit. So in hindsight, watching this print, what happened is we got that massive push down, and this candle wicked my partial profit. So I was 50% out and my stop loss got moved to break even. As price pulled up back here and it closed there, we got this massive push down, hitting my 2R take profit before getting rejected all the way back up, back to my entry. And then as price kind of continued out throughout the day, it did move lower. I did have a daily zone drawn down here, which it kind of respected on the lower time frame. And then price ended up just kind of reversing back up. I'm actually at long bias on GBPCHF today, which is funny to see. Perfect kind of short bias on yesterday, and now kind of long bias today. With trades like this, shift candles present more often than candle formations. I had to find a way how to kind of filter out the shift candles. So if you're not in AceFX and you're wondering what a shift candle is, it's basically the exponential moving averages, the 8 and 21. A candle shifts those to down or up. So an upshift is if a candle brings them up, and a downshift is if a candle brings them down. So yeah, so it was with the shift candles, they happen quite often, and I needed a kind of a binary rule to help me identify which ones to take and the high probability ones to take. And this kind of leads me into today. So if I just reset the chart, get rid of the replay tool. With the shift candle that happened here, obviously, like I was saying before, it doesn't look like a shift candle, unfortunately, because volatility under London Open pulled it down. They are less probable, but they still have a decent win strike rate. With this kind of being out of the Asia range, I mean, you can kind of argue this. I don't know if the indicator's a bit off, but based on what I'm seeing, based on how I've tested it, I still took it as a entry. You can see we got another shift candle. This one is valid this time. So this one just closed 15 minutes ago, and we got 25 seconds left on this candle. To me, this was overextended. So overextended candles, I cannot trade either. Hey, going Dominic, hope you're well. Yeah, so I can't trade overextended candles either. So I got a whole bunch of kind of rules around my system. And yes, you can have too many rules in a trading system, but what I have, it still offers me enough trades throughout the week to take advantage of the market, and it also keeps me enough to be selective and not over trading. So if anyone took this shift candle based on your rules, it is still valid. out of the Asia range. I think EMA is perfect. I don't think we had no divergence on this trade, and this would have been a perfect setup besides the overextended. So I'll mark this up soon. And I think, was it GA or no, GN, sorry. GN also had a valid shift candle, but once again, it was inside the Asia range. So that's a trade I cannot take. But based on the AceFX system, this was valid. You can see I also have a daily zone as well drawn there, and you can see prices respecting that. So with GBPCHF being overextended, once again, this happens a lot as well. So with the overextended candles, you'll be surprised how many entries present with overextended inside the Asia range or the first break. Taking all of those candles out and all those formations and all those entries out of the backtesting results provided a much bigger win rate, and it actually made you a little bit more profitable over time, which was interesting to see, because even though yes, they are successful, if you were to trade overextended candles, you would still be taking a lot more you'll be trading a lot more frequently, taking a few more losses, but actually avoiding them will actually put you in front in profit. Not by a lot. I think it was like 6% over the whole year, but it was just interesting to see. Josh was dope. I just don't like the risk to reward. Yes, I. Yeah, so Austin, with the risk to reward, I think that's another thing I do with my analysis. So I go off probabilities and averages based on my testing. If I was to look at that and say it's not good risk to reward, it literally is logical. I would tell any other trader that's a great way to trade. Being systematic, being kind of very rules based in the way I've tested it, 1.5R is, I wouldn't say guaranteed, but it's very, very likely 1.5R will get reached. That's why I have that as my first take profit and also my first protection stop. So as soon as 1.5R gets hit, I'm taking partials and I'm moving my stop loss. With 2R, it is a little less likely to get hit, but it's more likely than not. The trade's gonna hit 2R, just like that just trade I took yesterday, where it just pinned 2R and then kind of had that move down, and then price came straight back up. So this just over here, very similar. You see that quite often a lot. Thoughts on Euro GBP? All right, let me look at EJ, sorry. So it's got a perfect L50 in the sell zone. Austin, are you referring to the shift candle? Man, this pair has no volatility at all. That would be the biggest candle of the day. Do you consider GBPCHF out of the Asia range in first entry? Yeah, being with GBPCHF, yeah, I would. If I was to take that entry, that shift candle doesn't look like it's shifted, but if I was to take that, yeah, I would. Just because it has to be rules based, it either is or it isn't. So yeah. But yeah, so it's funny to see how I was short biased on GBPCHF yesterday. I'll delete all these notes just to clear this up. Coming off, this was Friday's low as well, plus the 800 EMA, how it pinned it. And now we've gotten above the 800. Yeah, we've gotten above the 800, holding the 50, holding the 200. And now I reckon we can definitely see some bullish momentum on GBPCHF with perfect market sentiment in the buy zone. Out of the Asia range, holding the 50 EMA, definitely. I think the higher time frames were very bullish as well when I did my analysis yesterday. So the 1 hour is pulling into the buy zone to TDI. EMAs are bullish. 4 hour in the buy zone, EMAs are bullish. And then the daily, I believe this was it's in the buy zone as well. EMAs haven't shifted yet, but if I just get rid of all my drawings, it's broken above the 50. So just looking at this for closer analysis, you can see all these pins to the 50 on GBPCHF, and then we got that kind of massive pullback, and then this candle yesterday, so on the daily, we broke above it, and now you can see it's pinning the 8, 21, and 50. So I'm pretty long biased on GBPCHF. I know James is looking for GBPCHF longs, which makes sense. In terms of the resistance I'm seeing at the top here, there is a zone. You can either look at yesterday's high, price through a few pins up here, on the retest after the shift candle 1 minute retest of the 50. Okay, yeah, I see what you mean. Yeah, so with EJ, this would kind of be like my only GBPCHF, sorry, this would be my only kind of zone I would be hesitant about, but based on testing, definitely this could hold the 8 and keep rising, especially with the higher time frames on our side as well. So GN, like I said before, did present a entry, but once again, shift candle inside the Asia range. Even though everything else lines up, this is a lower probability setup. So this is why I took all these setups out. So shift candles can only be taken based on my trading plan if the Asia range is broken. So we'll see what happens here if it holds the 50 and the 200. And then GBP AED was the other one I had on my list. Looking for longs, you can see we had divergence building from last week. No, from Tuesday, Monday into Tuesday. Broke the 50, price came up. Then we had this bearish divergence building on top. So we'll see what happens. If it breaks the 250, it could definitely come lower. But still got my long bias on GA. So we'll see what happens. But yeah, so far GBPCHF is the closest thing to a great setup so far today. It was a very short, small watch list. Wasn't too many perfect L50s on the pairs I trade in my portfolio. So yeah, so as I was saying before, with Traders for Traders, I have had a few technical issues with their platform and trading on it. In terms of risk management, money management, and passing the 10% goal, especially with a max $2,000 daily drawdown on $100,000 practical assessment, it does make it a little bit more challenging. Not impossible. It's very possible to do it, but the way I trade and the way I've been trading, it conflicted with my rules too much. And when I was taking 1% trades on the trades I could, because naturally, if you see a perfect setup, you want to give it more risk. But if that perfect setup is a really tight stop loss, you have to size down. And I was doing that on Euro USD, GBPCHF. They don't have a lot of movement, so you're gonna expect a tight stop loss. When you do that for 4 or 5 trades and you can only risk 0.5% on a trade, and let's say those trades were winners, which when I was doing the assessment, they were winners, and they're not big winners, but they're great setups. So when you have another great setup, but let's say it's on GU where it's a lot more movement and the average stop loss is about 15, 25 pips, you can then risk that larger size. So you can give it a full 1% risk. Naturally, great setup, you want to give it more risk. Since you now can give it 1%, you do, and it's a losing trade, and it just wipes out 2-3 other trades. And that was just kind of just spinning my wheels on it. So it makes sense, I guess, as a company standpoint, as risk management, when you do pass the practical assessment for Traders, you do get a bit more breathing room. They increase the daily drawdown limit, but at the end of the day, you still only get 1 to 10 leverage. So it's kind of a bit of a double-edged sword. You know, I'm gonna keep going with them. I will eventually finish the practical assessment. I just haven't given it focus because when you look at these other companies doing the exact same process, coming to the desk, trading, same setups, everything's the same with the consistency I put in. Whereas if I go with FTMO, it just seems better off my money and my effort and time being put into a different company. So that's why I've kind of just hit pause on Traders for Traders for a minute. And yeah, so that's another one of my goals. By the end of the year, I just want to get funded. I'm still not sure which company to go with. There's just so many so many funding companies to go with. So it's, I guess, with the personal capital I have as well, I'm in no rush to kind of go out and get funded. Basically, like, I don't want to like put in all this effort, and then I got to make sure they're going to pay me out, and I just don't want to do it for the headache, basically. Tom, how did you calculate to take partials at 1.5 instead of say 1. So Tom, that was purely based on testing. So when I started back testing, I did a few tries with it. So what I'll do is I'd just go back in historic data. I wouldn't calculate or write down any data, and I'd purely just analyze and just mark up on the charts what happens more times than not. So I'd do it in batches of 10. So I'd go through 10 trades, and I'd see what the average risk to reward based on the setups that would basically I'd get. The average was about 2R, and probably out of those 10 trades in each batch, maybe about 3 or 4 were, you'd get kind of like, you can say home runs, where it would hold the 8 pretty much all trading day. Based on my experience as a trader, showing up every day, that simply doesn't work with my personality. I can't, especially because of my time zone, I can't sit here all day and just kind of manage, well, all night, and manage these trades. So I kind of got the average risk to reward, which was 2R, and that's exactly how I'd kind of trade now. So I kind of just take my full position off at 2R and just come back every day. That's why it was really important for me as well to kind of find the perfect balance between trades being conservative, selective, and also not over trading. If I was looking for home runs, I guess you can be a little bit more selective, but if you are taking 2R take profits, you kind of want to have a bit more of a variety and selection in your trading, because yes, you are out at 2R. So yeah. Did you trade anything today? I'm still flat today. I haven't taken any trades. I would have taken GBPCHF shift candle, but like I was saying with Traders for Traders, they simply won't allow me to risk more than I want. So I'm just having a break with them at the minute. So looking at GBPCHF, it is trying to break back above this zone here. I'm big on psychological numbers, so even handle numbers. They are very strong in the market. So kind of looking for the next one. I reckon 1.26600. Price can break above that level, you'll definitely see price move higher. Psychological numbers in the market are very powerful, especially on GBP USD and GJ. Yeah, I'm still flat today. I haven't taken a trade. I only took one trade yesterday. How you going, Stefan? I'm good, thank you. So yeah, so the new risk calculator I'm using, Austin Silver uses it. It's called riskcalculator.net. Let me just double check that. Basically, it's very similar to Magic Keys, but it's on your MT4 platform, so it's on screen instead of an actual physical device. How you going, Quentin? So this is it here. So it's just like the risk calculator. It is, I think they actually got a promotion on it at the minute. I think I pay like 10 US per month, which is another thing I didn't really like. I hate subscription-based things. But yeah, so you can enter your risk to reward ratio, sell, buy, execute trade, and then it calculates everything automatically. Pending orders, close half, stop loss to break even, partial take profit. So it's pretty much automatic trade management, and I love automatic trade management. Takes a lot of your opinions and emotions out of it too. Tybor, how you going? Morning. Do you have any mitigation management? So with mitigation management, no. So if my stop loss gets hit, especially in the lower time frame, you gotta, with the day trading approach, you do have a tighter stop loss, which means the market can shake you out more times than not. The way we trade at ASFX and the systems we use, obviously, it is a higher strike rate, and these systems basically take advantage of momentum. So their stops do hold their position. But if I have my stop loss set down here, I used to mitigate my risk. So let's say if I was bullish and I took a long entry, if the next candle after my entry candle was bearish, I would close half my position. That is a really good way to mitigate your risk. But the way I trade now is I purely just set my stop loss, set my 2-hour take profit, set my 1.5-hour partials, and then just let the trade do its thing. You can see on GBPCHF 1.26600. If we can break above that resistance, psychological even handle number, with a candle close, I can definitely see this coming higher. Yeah, so my trading is, I've taken a lot of stress, I've just made it very rules based. It's kind of really boring at the minute. I know exactly what I'm doing, exactly what I'm looking for, how I'm doing it, where I'm getting in, entries, stops, targets, everything like that. Every trade gets 1% risk. I no longer grade my setups either. So all trades will be given a set risk on everything. But once again, I still feel like it's logical, especially the way Austin Silver teaches it in his systems, to grade your setups, especially with the amount of parameters Austin gives us. It makes sense that if you can line up a lot of the parameters and build a lot of confluence in your trade, to hit it with a bit more risk, because that just puts probabilities in your favor. If anyone's from Sydney, the weather is absolutely crap. We're meant to be going into summer next month, and it's just been raining. It's cold. It feels like winter. Hate cold weather. Yeah, so most of my attention is on GBPCHF. I am watching GN as well. So like this was another ASFX entry, Tybor. That would have been my stop loss down here with the spread included. Now that price has broken the 8 and 21, if it breaks the 50, it will definitely come down and stop me out. Could possibly move higher off this zone down here or off the 800, but yeah. And I'm watching GA as well still. GA is kind of just consolidating at this level. My heartbeat increases while trading, and after that I take wrong decisions or not follow my trade plan. I like that question. So I consider myself, I've been through a lot. I'm sure a lot of traders have been through very similar emotional kind of self-sabotage routes. With getting nervous while trading, it's definitely a confidence thing, or you are simply risking too much money on your trades. When I first got into trading, I was doing the same thing. I would enter a trade, I would get very sweaty, I would get nervous, and trading is uncertainty. And as humans, we want to know, I should say, what happens next or what's going to happen, and we feel like we need to have control. When the fact is, we actually have no control over the financial market. We have no idea what's going to happen. We take an entry based on what our system and trade plan tells us to do, and we literally have to play out the probabilities. Whether it hits our stop loss or if it hits our targets, it is still a great trade if we are following our trade plan. The thing that gets more emotions involved and makes us kind of do silly things, get our opinions involved, is either you are over analyzing your chart, so you're doing too much analysis and you're getting analysis paralysis. You're risking too much, so you are in a trade and you obviously have too much capital at risk. There are so many factors that go into it. The best thing that helped me was to remove as much subjectivity as possible and focus on the process and stop being outcome driven. So the biggest thing for me when my heartbeat increased in trading was when I started trading my live real cash, live money. I would enter a trade and I would be so fixated on the P&L. And when you're up, you know, let's just say $200, $300, $400, and you can literally by a click of a button, you can secure that profit. And you know, $400, $500 is a lot of money to some people, especially if you're day trading. As soon as you see that P&L start climbing back down, you get really nervous if you're so focused on the P&L and the outcome of the trade. So that's why it's so important to be process driven instead of outcome driven. So what helped me with that was simply doing a ton of back testing. A lot of people know the amount of back testing I've done. It helps you build confidence in the system since you understand the probabilities. Basically, if I can bring up a tab, I'll show you guys. So Hitesh, I'll show you some of my back testing and 630. See if this works. Let me zoom in on this. So this is my back testing. This is literally trading, back testing in historic data, these exact patterns you're seeing here. So this would have been the entry. This would have been the entry where I have it marked up over here. So this candle. And what I've basically done is in historic data, I have tested these patterns over and over again. These are the AceFX A1 system entries. And what I did is I back tested them from July 2020 all the way up to July 2021. Doing that and understanding how those patterns repeat and are profitable, which is the most important things, gives you confidence to execute and pull the trigger and let whatever happens in the live market. So you kind of remove all that emotions out of it, because not that you know, but you now have something in front of you. You have data based on historic data, the same patterns that you would hit execute in the live market, you now have data on. And this is all the back testing I've done on them. You can see the best performing months, the amount of trades you would have taken, the best performing pairs, and your P&L over time. Having this data in front of you, actually what I'll do is I'll open this up in a minute. I've even filtered out the time zones I even trade. So with all this data I have accumulated, I've filtered out 5 o'clock to 8 p.m. Australian Eastern Standard Time. And what that does is it gives me the best probable data of knowing how my system is going to perform, the drawdown I'm going to go in. So if I take 1 loss, 2 loss, 4 losses, 5 losses, I know based on this, I can take up to 9 losses in a row. So if I'm 8 losses deep, 9 losses, as soon as I hit that 9th loss in my $9,000 drawdown, if you're risking 1% on a $100,000 account, you understand that this is part of probabilities and it's part of how the system plays out. But overall, if you keep trading it, letting those probabilities play out, you're going to come out profitable. You're going to dig yourself out. Even with a 61.6% strike rate, you're going to come out 181% profitable at the end of 12 months. And you got to remember, all this data here isn't filtered. It's only thing I've filtered out is just the time zones. And what I'll show you guys right now is, I think that was A1. So this was 5 o'clock to 9 p.m. This data is 5:30 to 10, and you can see how the strike rate increases a little bit more. And then this is 6:30 to 9. So if you guys are in AceFX and you're watching this, this is interesting as well based on testing. Just by adjusting the timeframes you trade, this is all unfiltered data as well. So 6:30 p.m. to 9 p.m. Australian Eastern Standard Time yields you a 73.5% strike rate without filtering out your trades. Whereas if you're trading from 5 p.m. to 9 p.m. Australian Eastern Standard Time, it's 61.2%. So simply by changing your time frame a little bit, you can increase or decrease your strike rate and your profitability as well. It's simply you are taking advantage of different time zones, different market conditions. You're either trading while the London session has settled. So as soon as London opens, if you take an entry, you're going to get shaken out. There is so much volatility sometimes when London market opens. An hour after the London market opens, it kind of calms down. And then if you get an entry, that usually has a lot of momentum in your favor. So there are so many things that that can kind of what's the word I'm looking for? So many things that can simply change the course of how your system, based on the same patterns, will play out. And this is just raw, unfiltered data. The only thing like I said, was the time frame. If you started, so with AceFX, if I jump over here, if you start taking trades purely out of the Asia range, you increase your win rate. If you want to test divergence against your trade, so if you have bearish or bullish divergence, and you test that may influence your trading outcome, and it may increase or decrease your trading probabilities. So there's just a ton of things you can do in trading. And I think coming back to confidence, you got to build something that fits your personality and fits kind of your lifestyle. You can pick a system off the shelf that is proven profitable, just like the AceFX systems, but eventually you're gonna have to kind of tweak it and kind of fit it into your own kind of lifestyle and your own trader personality. Yeah, Quint, it is an emotional roller coaster for sure. Is the win rate based on hitting your partial pro? Yeah, so Tom, it's literally based on how I would test in the real market. So all the data that I've tested is 1.5R. As soon as price hits 1.5R, I would move my stop loss to break even, take 50% off, and then 2R fully out. I never kind of tracked what happened after that, as it wasn't kind of, I do have markups of every single trade. So if I go into my back testing, basically I screenshotted what happened after and before the whole trading day. So if I ever wanted to go back and do a bit more analysis and trying to tweak and redefine the system, I have that data in front of me, which is good. So it looks like GBP pairs are kind of coming back down a little bit. See, it is hard, like logically, if you were trading, if you're trading a system based on probabilities and letting those probabilities play out. So if your entry signal, just like I do, and let's say an entry presented and you analyze this chart, right? This is a really good example. So this is why opinions and emotions have no place in trading. I know for a fact psychological even handle numbers like 1.2660 are respected in market conditions. If an entry presented that I could have taken advantage of, I would have been in that trade regardless of what I thought this level would do. Because yes, we know they can have an influence to price. We don't know what's going to happen. Price could have easily pushed right through that level and hit my take profit if I was in this trade. Or it could have rejected it and hit my stop loss. At the end of the day, it's not up to us to forecast or predict what's going to happen. It is up to us to kind of play the probabilities of what the system's performance tells us. So, I mean, there's so many things in so many ways you can go about trading, and it is so easy to stuff it up and negatively skew your performance in trading. It's unbelievable. Right, so you know that most will profit and prepare that some will lose. That's great about time zones. Yeah, Quinton, so exactly, it's still profitable. That's the great thing about the AceFX systems. It still amazes me how multiple time frames, different markets, different time zones, it can still be profitable. I think if you are a trader and you need that extra 5%, 10% win rate because you like winning more than you lose, then this is great data to kind of have in the back of your pocket to kind of look at and say, hey, look, if I trade at this times, if it fits in with my personality, I can increase my win rate by 6-10%, which is awesome to know just by literally not changing much, but just changing the times you trade. Mark B, with EN or GN having big Asia range, would you not consider trading inside them? So with EN and GBP NZD. So GBP NZD is one of a tricky pair for me. I did test it and it was profitable, so I had to put it in there. But sometimes the spreads especially with my personal broker and Traders for Traders, can sometimes get up to about 4 to 6 pips. As a day trader, that puts you in a massive unadvantage straight off the entry. If you are entering at the candle close with a market order, and that's not even including slippage. So you enter your 4, 5, 6 pips out in front of the market already, behind the market, sorry. And then if slippage gets involved, if a lot of volatility and volume kicks in. With the Asia range, I never tested it, Mark. So if an entry did present, I would still take it. But in saying that, large Asia range don't happen very often. And I know personally that Asia ranges and banks, if price does go to average daily range, the banks will actually pull it back. So that's why these levels are respected quite often more than not. I actually learned that through Traders for Traders. They're the only other company or trading education people out there besides Austin Silver that talk about in detail average daily range. Hitesh, how much time do you give market after starting to make a watch? So I start my trading. I actively can pull the trigger on any of my setups at 5 p.m. Australian Eastern Standard Time, all the way up until 8 p.m. So I get to my desk at 4:30, and I spend about half an hour building out my watch list, doing a bit of extra analysis. And as soon as 5 p.m. hits, if a setup presents on 5 p.m. to candle close, I can take it. So I don't really give too much time in doing my analysis or anything. Once again, because I am more of a systematic trader, I know exactly what I'm looking for and how to do my analysis, which is purely on the 15-minute time frame, exactly how I've done all my back testing on the systems. So looking back at GBPCHF now, depending how the next 12 minutes go, will either present an entry for me. So I just get this tool out. So I have to measure the biggest candle of the day, which is, let me just get rid of this. So the biggest candle of the day is this one, I believe. It's only 7.4 pips, 7.2. And basically what I'll do is 7.3 pips. You can see this. Actually, you know what? I'll do this. This is easier for you guys to see. I'll create my own candle. There we go. So if the candle closes higher than this white zone, that would be considered overextended based on my rules and my back testing, and I can't trade overextended candles. So let me put this really close so you can see. So let's say it closed there, it would be a valid entry and I would take the trade. So this could be a very potential trade setup. And I'll be looking for 2R targets, so something like that. So I'll keep close attention on GBPCHF. I think this is also, you got to remember, with systematic trading, there's going to be points and like times in the market where you're going to have the perfect chart set up on the 15-minute, and one rule may trigger like an overextended candle, and you simply can't enter the market. That is just the pros and cons of being, well, one of the cons I should say, of being a systematic and selective trader. You can't overtrade and take every single trade setup because that's humanly impossible, and there'll be so many emotional triggers going off. And you can't be too selective as a day trader because you want to be showing up every day, taking trades. Otherwise, you're here all week doing nothing really. So looking at GBPCHF now, that would be classified as overextended. If it breaks above that 1.2660 level, we'll definitely see it come higher. It's been an interesting market this week. CGN's coming down, so if it breaks the 50, I'll expect it to come lower to the 200 and then obviously hit the stop. But I was never in this trade, I was just marking it up. Get rid of that. Can you build me one of those? This computer is, I've been having so many PC issues lately. I just want to chuck this one out the window as well. I don't know, just something weird's happening here lately. About taking multiple entries, this is what I am actually considering margin calls. 1% risk usually takes 70%-ish of margin call. Yeah, so with margin and leverage is just, it's one of those things. So if you're taking multiple entries, the same type of, with traders for traders and how they deal with margin, with a Wanda, I used to have a 1 to 500 leverage with my personal trading account. I never used it, but here in Australia, they recently cracked down on massive leverage for, mind you, this was a regulated broker in Australia as well. So they've actually cracked down on that. So I think the max leverage we can get is, I think 1 to 20 now in Australia on obviously regulated brokers. I don't recommend trading with unregulated brokers, especially if you're serious about trading. And you could have a good few months trading results and they don't really have to pay you out. It's just the whole thing. So I'm thinking about either trying to go full margin or reduce to maybe get a second entry, not like free. Yeah, I would say to that, Tybor, with multiple entries, I'll come back to this in a minute. So with taking multiple entries, I think it's best to, depending how you want to go about it, I have been trying to create like a trading bot, like an EA for the AceFX A1 system. That was kind of my initial kind of thoughts when I first started backtesting last year, because it is so systematic and you can literally write rules, clear defined rules about how the A1 system is executed. You can easily put it into a script and a robot. The thing is, you'll be taking, like you just said, a lot of entries. And I mean, if you're trading multiple pairs, so if you're trading auto GBP and Euro pairs, even some of the USD pairs, just those alone, you're looking at probably anywhere between on average, like you said, maybe 2 to 5 entries per day. And that is a lot to kind of be juggling around. I remember testing some days I would have about, at the same time, six entries at the exact same time across multiple different pairs. That's why I had to kind of create the filters around it. But I think going forward, it definitely is better to be more kind of selective. But usually I still pick, it's always the way in trading where you always pick the losing trade. With my back testing, the way I've done it and the way I've analyzed it is, if I have multiple setups on the same day, I get rid of the ones that have the most knocks. When I get rid of the ones with the most knocks, it's the perfect setup that ends up being the loser. It's quite funny. So with GBPCHF, I'll probably get my MT4 platform ready. This is going to be tight. If it doesn't break 1.26600, I can kind of assume it could get rejected off that level and come back down. But once again, we never know. And if it's not an overextended candle, it's my rules and I have to take it because I got to let those probabilities play out. So is that GBPCHF? So you see how it's kind of staying within that white box zone. It needs to close in that zone for it to be valid based on my rules. I think this is another thing, like if you really struggle emotionally and with trading, if you have a setup like this and you wait for the candle close, and let's say it closes above, you have to skip it. You can get involved if you want, but you're going against your rules. And if you get stopped out, you're going to hate yourself. If you win, you're going to feel like a champion. But at the end of the day, you went against your rules. And how many times are you going to do that? So consistency is a massive thing with trading, especially taking setups that even it's just the smallest thing where it's 1 pip too big. So yeah, I guess you just got to be comfortable with letting trades run. And then on the flip side, if you do follow your rules and the trade ends up going in your direction, that's a whole nother emotional battle everyone's got to deal with. But yeah, very long bias on GBPCHF. I'll check GN as well. Kind of just holding that zone there. And GA is just consolidating. See, if GA presented a shift candle, ASFX A1 entry, I wouldn't be able to take it since it's still in the Asia range. Oh man. Got about 3 minutes left on that candle. So anyone watching this stream big big on NFTs or kind of getting into the NFT space, crypto and all that? Very interesting. I don't know. NFT space is very hyped at the minute. The amount of stuff selling, what's selling, just photos, art, JPEGs, it's just insane. I don't think I'll get an entry on GBPCHF. This candle's gonna close way overextended. Yeah, it's always depending how you trade, always waiting for the candle close is pretty important. You'll be surprised how a candle close defines what happens next in the market. From backtesting, from day trading and sitting here watching the screens hours on end, it's interesting to see how it plays out depending where the candle closes and how it closes. You can see this zone as well on the 1 hour. Basically, you know, this candle body on the 1 hour that closes in half an hour, if it doesn't close above this wick, it could easily get rejected and fall back. Even on the 4 hour, you know how many wicks where you haven't got a body close in how long? Since the 10th, 5th. Yeah, since I think last Monday. Yeah, last Tuesday, we haven't been able to push back above this level. So what makes us think that price may continue higher? You know, even though it's kind of just consolidating, it's kind of ranging up. Curious to see what happens. So 2 seconds left on the candle close, and there we go. So once again, that would be on GBPCHF right now would be a valid ASFX A1 entry. But if you were to take it, there is nothing wrong with taking a setup like this. Just understand that the price is the candle is overextended, which means your stop loss would have to be down there, which means if you were trying to get good risk to reward, you'd have to be aiming a lot further higher. Whereas if it closed a bit lower, let's say if it closed within here, you can see that's 3.2R or 2R based on that candle close if you wanted to add in spread. So the difference in where you get in and the entry is very important, especially as a day trader on the lower time frames. Just because we could see kind of momentum, bullish momentum now after this candle, you might, even if you entered it now, you could go into profit pretty quickly, but more times than not, based on my back testing, an overextended candle will pull back to the 8 EMA, or depending on market conditions, news or whatever, it can just kind of fly away without you. I can get rid of that now. But yeah, I'll be curious to see how this one plays out. Once again, based on my rules, based on testing, based on my trade plan, I literally cannot enter this, even though if I think it may go higher. Like I said before, opinions and emotions have no place in trading. You know, even though we broke above that psychological level, new high, I think this is a new high from yesterday as well. So definitely long bias in GBPCHF. You can definitely see this rising, but we never know. Anything can happen. It's just crazy. And as humans, we want to be right so many times, and we want to prove ourselves that we're right. So we will enter these trades. But once again, it's just a matter of being selective, being rules-based, and just literally having the confidence in the system to execute every trade that your trade plan says you need to take. All right, so I'll keep an eye on that for the next 12 minutes and see what happens. So I wanted to talk about NFTs. I've been kind of digging into the NFT market a little bit, kind of finding everything out about it. It is one of those things where it's like, is it based on hype? I think a lot of it is, but there are projects out there, and I'm about to show you one that I'm really invested in and one that I will be investing in. Especially if you're in Australia, more importantly in the Gold Coast, so in Brisbane, there's an NFT project called Gym Bros, and basically they are going to be creating the first NFT gym. Your NFT will also act as utility, being your gym membership. So just by owning this NFT, you have access to this real life facility. It's an amazing project. I'm really invested in it. NFTs, when I first started researching about 2 weeks ago, it was more about the art, the hype, the projects, the communities, and the idea of owning something, a digital asset that no one else has. So I collect like Pokemon cards, right? And basically, not many people know I have these. I would have to take a photo of them, list them, put them on a marketplace, just like you do with an NFT. But with a digital NFT, everyone knows you have it if they go looking for it or on an NFT marketplace. With, let's just say, Pokemon cards end up being NFTs, imagine owning the rarest one, how much money that would go for, especially being held on like the blockchain with crypto. I think it has a lot of potential. And then when you start incorporating utility with them, so an NFT acting as your gym membership. I'll show you guys the site real quickly. So this is Gym Bros, based up in Brisbane, Queensland, Australia, and literally they are creating NFTs. So their artworks, Gym Bros, they all have uniqueness about them. There is going to be, I believe, 10,000 unique designs. there's going to be some really rare ones in there that people may want to buy off you for a massive markup in margin. And it's like collectibles, but you get free access to a gym, you get free seasonal merch drops from the Gym Bros store, so they're going to have a clothing store as well, and 50% off all orders from Gym Bros online. This is kind of like, it's one of those things where it's unreal, because when you think about, I don't know how many of you guys have seen the movie Ready Player One, where you can make transactions from in-game items and use them and sell them for real world cash. This is kind of what this reminds me of, where you can buy something online that's made digitally, and you can sell it for real world cash in crypto and convert it into your USD, Aussie dollar, New Zealand dollar, whatever. It's very interesting to kind of see that kind of marketplace and that being a bit of a reality now, which is insane. And with this NFT I brought this NFT, I think last week. You guys probably can't see that. And I brought it for, I actually can't remember how much I brought it for. I think I brought it for like $4, and it's already $7. I didn't want to spend a lot of money on my NFT, and then I created my own NFT using Blender and a few other editing effects, and it's just crazy how it opens up a whole nother world for digital artists. And instead of trying to sell their work, which you can't, it's very hard to sell digital artwork, you can now do it on online with crypto. So very interesting. Very interesting indeed. Curious to see what GBPCHF does now as well. I feel like this may come higher for sure. GA is just about to break to 50. If it closes below the 50, I won't be interested in that anymore. Since my trading session finishes at 8 p.m. as well. GN is just kind of moving sideways all day. GBPCHF is the only one that's kind of making a directional move. At the end of the stream, I got something as well that a cool little clip I found from a book called The Mountain Is You. It's kind of like based on like self-sabotage, and there was a little paragraph in there I thought was very interesting, especially with a lot of people that's kind of perfectionist, kind of avoiding doing things. Hopefully it will kind of give you guys some motivation and help. Also this week we have I believe it's tomorrow, so Thursday, all day there's a G20 meeting. Basically banks talking about stuff. It can influence the currency market, so keep an eye on that if you're trading tomorrow. And we also have FOMC meeting minutes. We have unemployment rates in Australia at 11:30, which is high impact news, and I think the PPI on the USD 11:30 p.m. So a few big news events tomorrow, and then also core retail sales, and I don't know if Empire State Manifest, I don't think that really one shakes up, but yeah, a few important news events to kind of keep an eye on, especially on the USD Thursday and Friday. Yeah, besides GBPCHF, I think this would have, if this entry candle wasn't overextended, this would have been a really nice entry. No divergence out of the Asia range. Perfect L50, high time frames lining up. While I'm waiting for this candle to close as well, I will also say, so Austin Silver, James Bruce, they are doing a thing called the Black Shirt Club. It's basically mentoring, but like on a more, I think it's like a more kind of personalized Forex trading mentoring. And I'll bring you guys to the thing now, the tab. So they are doing this thing. So James is a really, the way he trades and the way he sees the market and the way he kind of gives you his perspective is very valuable to new traders, even experienced traders. The way he sees the market, and especially with the AceFX systems and how he's incorporating his kind of own edge in taking advantage of setups like exactly like the AceFX systems, but he's getting involved at different entries, using a very similar stop loss and everything like that. Basically, he sees the market and can provide a lot of value. And then on top of that, with Austin's experience in the market as well, it's definitely something if you are willing to kind of take that next step, or you feel like you're kind of struggling with your trading. If you are with AceFX, you know the systems, you just can't seem to kind of get a better handle on, you know, the final piece of the puzzle. I put it, the best way to kind of explain it, this would be something worth checking out, especially in kind of like a group with two coaches. You know, I don't know if you guys seen the video with James showing you how much he's made this year. I think it was like 80+% funded trader. He definitely knows what he's doing, and he has a lot of experience and knowledge that can really guide you in the right direction. The way, like I was saying, like he doesn't overcomplicate it. He is a little bit more on the advanced side in how he takes his entries and what he's seeing, but it's nothing that can't be learnt or incorporated into your trading. So I'll put the link in the stream for you guys to check out. I have no idea how to do this. Hang on. GBPCHF kind of like holding at that level. I have drawn up there as well. Cool. So I've just put the link in. I hope you guys can see that. For the AceFX Black Shirt Club, yeah, definitely if you feel like you need that extra motivation, that extra push, that extra kind of one-on-one coaching, definitely something to look at for sure. Curious to see how price reacts to this resistance level now. I feel like, not that the market cares what I feel like, but it looks like it's pretty strong resistance level. But let's see what happens. So candle kind of just closed in this indecisive candle there. Let's see what happens. Number levels is not part of the AceFX, but you like to use them. Yeah, exactly. So it goes inverse to kind of breaking a level. It is hard to kind of use them as support and resistance, but they can. I do like using these levels as support and resistance, those psychological levels, if they kind of tie in with previous support or resistance. So in this case, let me just jump up. Okay. So in this case, I guess you could, since coming back, you can see how it's respected here, and then kind of broke out. You see how kind of price broke, kind of like we did just now, and then it kind of fell back in. It's hard to say using a psychological number. I like using wicks and bodies, but 100% you can use the same concept as you can now use it as a support level. And then you can see, so over here, price rejected it. So let me just mark this up for you guys to see. So yeah, so mark with the psychological numbers 100%, but you got to add a bit more confluence with them. So in this case, you have it. You have this kind of consolidation period over here around that even handle number. But more importantly, I hope you guys can see this wick. You can see how price literally to the pip came